do when you believe that you have a high in or a low in, you want to pull that pivot. So in this case, I presume that this is the high. So I take this high and I take the last low. Okay, so this wouldn't be the last low. It would be here. So I take the low to the high. I see the move down outside. Okay, so we move away from the entry trigger, and then we come up, back test the entry trigger. There it is right there. You take that. Okay. Now, what is risk? Remember, after the back test of the entry trigger, now the stats are in your favor. Only after the back test, stats are in your favor. If you even use the 0.12, I mean, that's still a 1.3% risk, and that's still good. 1%. I mean, anyway, you could have gone with 1%. You could have gone. You want to use some sense when you're setting your stop loss. Okay, just because stats are in your favor, don't just go, okay, I'm gonna set it right there. At least use some last candles market structure, some last structure. Even if you don't want to go to the 0.12, find a candle. Okay, because the stats are in your favor, but you don't want to be naive. Still use some type of structure. Okay, in this case, it would have been 1%. But what was your reward? Well, you could have had 1% risk for 9.5% profit. 9.9% profit, depending on if you took profit exactly at the bottom, which most people probably didn't. But nonetheless, you would have reaped a big reward, right, for a small stop loss. But stats are in your favor. Always keep that in mind. Always, always, always keep that in mind. Okay. So next one we got here is we have an uptrend. Okay, you had two opportunities to get into this market right here. We have an uptrend. We have higher highs, higher lows. We have a little bit of consolidation here, which I'm presuming was a 3, 4, 5. Okay. Yep, 3, 4, 5. And so if you're up to date with your count and you're on point, then you know that you're still looking for upside. So in this case, where can you enter? Okay, easy. You take your fib, your entry trigger, take your ET from the high to the low. In this case, maybe you would have got stopped out. And I know that this is the case because the 0.12, I use this on purpose because I'm showing you that the percentages and the statistics are in your favor, but it doesn't mean that you're never, ever going to get stopped out, right? Yeah, that's not realistic. Trading isn't 100% perfect. We all know this. So in this case, if you waited for the back test, you got it. 1, 2, 3. Okay. Nothing. Okay. Where would your risk have been? So remember your take profits, right? Remember you got your entry. Oops, sorry about that. Remember you have your take profit is generally you always want to take profit at the 618, the golden zone. So here you would have been paid out. You would have back test. You would have back test here, golden zone. There's one trade, 3%. You would have back test here, golden zone. There, take 2%. And stop loss at entry. So hopefully, if you're taking profit, small profit, big profit, it's up to you. It's your choice. Then your stop loss will be at entry after, and you don't lose any money, right? But if you were looking to hold this long because you're presuming this is a 3, 4, and then you're looking for another 5, well, if you took this entry here, your stop loss, right, according to market structure, you want to do a 0.5 because statistics are in your favor. I don't blame you. You would have got stopped out. That's fine. You only risked 0.5. Okay. Now let's look here. You had another opportunity, which was right there, right? Take profit at the golden zone, stop loss entry. Okay, you would have been stopped out again. That's fine. Hopefully you took profits. But then here's another opportunity. And so just because you get stopped out once or twice, it doesn't mean anything. It literally doesn't mean anything. Stats are still in your favor. So you want to keep looking because you're looking for another wave up, high to low. Okay. You're waiting for price to come outside of the entry trigger and back test and then go. Now, again, you have to remember, why would price come back into this zone? Because it's either business is not done or it's going to go lower. Obviously here, business was not done. So they came back in for the liquidity because they were going to do this and take it up again for a big wave. So they had to clean it up. They had to throw people off a little bit, right? But here, if you're being patient, you're waiting for the entry trigger, you had the perfect entry. You had 1 back test, 2, 3, 4, and 5. And not just that, you also had your 618 golden zone right there. 1 confluence, 2 confluence. In this case, you have an Elliott wave count. That's 3 confluences. In this case, you have a fixed range. If you like volume, you're at the value area low. That's 4 confluences. Okay. What was your risk? Let's see. I'm going to do one more after this, and then we'll wrap it up. 0.4% in risk, right? Remember, the stats are in your favor. Once you're back testing, stats are in your favor. It does not matter if you get stopped out. It does not matter. The next trade is always going to be your best trade, right? We're thinking like pros here. Not thinking like rookies. Oh man, I lost. Let me start shorting. No, be disciplined. Okay. So profit, you could have had 12%, 12.8%, 15%, 15.5%, and 17%. All those could have paid off for you with a 4% risk down here. So if you lost money here because you didn't take profits at the golden zone, well, guess what? You made it all back times 10 on here. So all these little tiny losses that you'll experience, it does not matter. The stats are still in your favor. Keep that in mind. Let's go back to the 1 hour time frame. And let's go with this one down here. I like this one. And there's a number of examples. I had to stream twice with everybody, so this is why I'm not going to really spend too much time elaborating on this. But here we go. Here was one where this one may have been difficult to gauge, right? Because most people probably would have been looking at this, looking for this to happen, and then something like that go back up. In this case, we take the range. We know we're in an uptrending market. We know we're probably in the middle of a wave 3. You know, that's why I say context, context, context. Don't ever just use this alone. Never, never, ever use this alone because you might get burned. Maybe you won't though, because this is such a good tool. But here we have the high to the low, right? Okay, so we're looking for longs. We know that the market is bullish. Potentially, we have a count that says, hey, this is just a little tiny correction. We're looking for another wave up. Look at this. The entry trigger hit once, twice, 3 times, 4 times, 5 times, 6 times, 7 times before you get big move up. Now, in this case, your risk stats are still in your favor. Let's just say let's just pick a random candle because nobody's ever going to get a perfect entry on all this, right? No one's ever going to. Let's be honest. Risk is still in your favor. Stats are still in your favor. Okay, look at this. You wouldn't even have risked more than 0.2% unless you came below the 0.12. And we know what the stats say about the 0.12. So keep that in mind. And what? So you risk 0.15 is for what? For what? Well, we'll have to drag this up because price went up so high. You could have, you know, by the time you got here, I mean, you're already 12% in profit. So, I mean, you're a winner. 26%, 30%, 40%, right? Okay. And if you really got patience, 43%, and all you risked, the only risk you had was 0.15%. Okay, guys, and I'll do one last bonus one actually. I'll show you the all-time high, how effective, okay, how effective this is. The all-time high had it perfectly as well. Now, hopefully you guys were Elliott traders back when this was going on because you would have realized this could be a 3, 4, a 5, a 4, and a 5. The volume in this move was much less than the volume in this move. Okay, so I'm sure there was probably some divergence. I'm not even going to check. The point why we're here is to look at the entry trigger tool. So here was your entry. Okay, so if you know that you have some kind of count for this, what you do, you're looking for a short, right? You don't want to be long in all-time highs. You don't want to be baited. You don't want to be trapped. Low to high, price comes out, back test the entry trigger, and down. Okay, so what was risk? Risk is whatever you put it at. You know what the stats are. Okay, so you could have used this high of this wick, which is 1.6%. And I imagine it was so deep because it was the all-time high. So they probably would have played with this rejection very, very much so. So there's probably why it's so deep and it's so extended. But nonetheless, you risk 1.5% for, I mean, potentially what your first sign would have been is you take the low. Market structure has changed when you come here. Market structure, right? Changed. Market structure changed. Market structure changed, right? Take. Takes the lows, takes the highs, drop. Okay. And that's all for me. Let me quickly just show you that these things happen all the time, guys. I mean, this was 30K range. This gave you an entry as well. You know, if you didn't short the top and you were thinking like I was, that this needed to come up and take that high right there. Well, this tool will also help you if you have a bias that's not correct. That's just not correct. Because look at that. Looking for shorts, right? You're in this range. You're in a downtrend. You've taken liquidity there. It doesn't matter if you think it should come and take this high. If you see that price is respecting the entry trigger, all right? Let's take it here. You see that price is respecting the entry trigger. There's an entry trigger on an entry trigger. Okay. So sorry, let me close that. Entry trigger hit, rejected. Okay. There you go. And then you get another opportunity when you take it from low to high. Another opportunity right there. Risk 0.91%. Okay. Put it above the high. You risk 1.5%. That's fine. You know, because if you have an account, if you have some reasons, if you have reasons, again, confluence, I mean, you can risk 1.5%, right? If you have potential to make 43%. I mean, so there you go. I just kind of glanced through these. I'm not going to explain it. I think you guys kind of get the idea by now. But this was a short. If you're looking for a short, low to high, right there, back tested, entry trigger hit, take profit hit. Okay, and it gave you another trade into another high. Okay, you're looking for a short, low to high. Price leaves the ET, back test the ET, entry trigger hit. Okay. And you guys can play with this if you want, right? It's not always going to hit the 618, but you know, you have a higher percentage maybe then that you come down and hit the 0.5. So you can put whatever take profit method you want to integrate, you can do that. I think we'll do a part 2 and it'll just be about how I use them to take profit in the context of higher term time frame, market structure, and you know how you can kind of look for swing trades out of this incorporated with your Elliott accounts. Okay, and that might be beneficial because you can see here right there it came down to the TR extension, so I can show you guys during that time as well TR extension, TR pocket. Okay, but you can see guys how this works. Now remember what I said about those small ranges. This is the one and only. This is actually the one and only example that I have in a chart where the 0.005 was hit, the only one. And this is why I say it's 1%. Okay. This is rare. This is a gem. Okay, but it is also a consolidation range. Kind of. Was this the weekend? No, it actually wasn't. No, so I can't say that. But this is nonetheless a gem. This is rare. Okay. And if you can find some examples of this happening consistently, or the 012 consistently after the backtest of the entry trigger, please tag me it because I want to see. Okay, guys, that's all I have for you. I hope you found this beneficial. I hope you guys can use this to help take your trading to the next level with the best risk and highest possible reward for yourselves and your trading accounts. If you have any questions, feel free to tag me. Watch it back once, twice until you completely understand. And once you get the fib levels, take it to your chart, take it to your altcoins, take it to the stock market because it works there too, and just go apply this tool. Even if you're not going to trade it yet, just go get the feeling for which kind of pivots you want to be taking. All right, because I know it might be a little challenging at first, being that you have to think backwards in terms of how you're pulling it. But what you'll find is it's going to be 100% worth your time. Okay, it will be 100% worth your time, and that's all the convincing I'm going to do. So we will call it there. Cheers.